What's up everybody, it's Dex. Welcome to another video on our YouTube channel, Between the Spreadsheets. Another video as part of the Stock Market 101 series. So today we're specifically talking about how to evaluate industries. Each stock that you invest in, that company is part of a particular industry. I'm going to give you a couple of tips on how to think about those industries before you invest. The first example is going to be travel. If you think about the travel industry, the first thing that comes to mind obviously is that it's seasonal. Being that it's seasonal, you know that your stock is going to be volatile. There's going to be different peaks and valleys, holidays, summertime. You might want to treat it as a short-term investment to say, I'm going to invest prior to a period where I think volumes and activity is going to be up, try to make some money and sell it. Or in the long term, you'll just accept that over time, it's going to be a lot of volatility in that stock. Now, the second thing to think about with the travel industry is specific to COVID-19 right now. We know not a lot of folks are traveling, cruise lines are not doing so well. So what does that mean for travel stocks? They're pretty cheap right now. The stock price is low, it's definitely an opportunity to buy. So if I was to invest in the travel industry right now, I would look at it as a long-term investment and I would not expect it to peak until sometime in the future when people are traveling again. There is a lot of debt that these companies are incurring because they cannot afford to essentially pay their bills. Or there are existing debt arrangements that they might have with creditors that now they're falling behind on those payments because the revenue that they would usually get from people that fly or take the cruise ship has been declining for 4 or 5 months. So when you invest in these companies now, you have to understand that there's a lot of debt on these financial statements, and that really does hamstring the potential of these companies as you go forward. The second industry example that I'm going to go through is the health industry. Now, the health industry is very unique because you definitely can make a lot of money in stocks, but there's also a lot of risk and a lot of regulation. You can think about maybe a pharmaceutical company, someone that sells prescription drugs or anything like that. The first thing you have to think about is that there's a long research period. So before anyone actually uses any type of health drug, medicine, there's a lot of research, there's a lot of approvals. So what does that mean? There's a lot of cost that's occurred during that research period, but while that's occurring, the stock price is usually very low. However, there's a lot of risk involved because if you think about testing, you either pass or you either fail. My advice would be hold off. You might have to pay a little bit more as it goes through different clinical trials, but I would not buy it very, very early at the cheapest price. At least get to a point where I see it's past maybe its first level or second level of required testing. Ideally, if it works, in the long term, there's going to be more and more people that's using this new drug that's been approved. So if you're able to get it at a low price, find a way to hold on to it. And the last thing that I'm going to mention in regards to the health industry, and it's also a risk, is in regards to competitors, or I would say generic brands. Anytime that you invest in health, if there's a new medicine that's coming out, there's usually someone that's waiting in the wings to try to make some version of it at a cheaper price. And if they can get their generic brand approved and be on the market with that leading company, the stock price for that leading company will go down. The third industry is going to be, I would say, payment services. In the long term, things such as Square, Cash App, PayPal, these are going to continue to be in existence because we're moving towards a cashless society, virtual currency, alternative payment methods. I'm very much interested in these in the short term and in the long term. There's been a big spike in stocks like Cash App and PayPal, and why? It's because everyone's at home. So I think this is definitely a good industry to invest in. Another thing that I'll mention, which has been really, really good in the short term, and I don't know if everyone's kind of heard of these they call them like susu boards or these kind of investment pools. Folks are exchanging money in a circle. You put in, let's say $100. You find a person, they put in $100. At some point you get into the middle of this circle and you get all of the money that's been put into the pool. You pay an existing investor with new investor money. Some people's made money, I think some people have not. The third thing that I would think about in investing in payment services, and you've probably heard this word before, you don't know much about it, but it's the new currency of Bitcoin, right? So Square, maybe about 2 years ago, their stock price went through the roof because they announced that they would be able to exchange Bitcoin. Testing was done, that changed, price went down, and now it's stabilized. My point is that each of these payment applications, if they can, as they go through the required regulations, they're going to want to be able to exchange, send, and receive Bitcoin. Any payment service that has that functionality, that capability, in the long term, I think that's going to be a really, really great investment. Thank you for watching this video. Feel free to leave comments below. Make sure you subscribe to the channel, and